Good afternoon, everyone. Welcome to ABC's IMF Article 4 Nigeria. My name is Joseph, and I will give you an overview of the housekeeping rules. So the mics will be muted as you log in, and only the panelists can have their videos on. If you want to ask a question, please signify by raising your hand. There's a button for that. And if you want to send in your questions during the Q&A, please do via the Q&A box, but please identify yourself and your organization. And also relevant materials will be sent to everyone after the webinar. There will also be a feedback survey that will be shared in the chat box. So we encourage everyone to fill that survey. So I'll be handing over to the CEO of American Business Council, Margaret Olili. Over to you, ma'am.
Thank you very much, Joseph. So good morning, good afternoon, depending on which part of the world you're joining from. On behalf of the American Business Council and the Lagos Business School, we welcome you to this webinar that will discuss the IMF Article IV Consultation on Nigeria. So the discussion today will highlight scenarios on the way forward for the economic growth of Nigeria and examine how Nigeria can, achieve a unified exchange rate despite global economic outlook, raising revenues and the quick wins from the diversification projects and plans. We're going to be looking at all this, and we're going to be having a very interesting panel. And we're hoping that the discussion from the panel and the participants will further enhance ABC's advocacy with the various levels of government. I would say that Nigeria and IMF have been partners for several years, and we will recall that in 2020, IMF approved $3.4 billion in emergency financial assistance under the rapid financing instrument to support the Nigerian government's effort in addressing the severe economic impact of COVID-19 and the vulnerabilities in the oil prices. So our guest today is Jasmine Rahman. She will give us an overview on Nigeria's economy today and top policy priorities. Jasmine is, as you know, I'm sure most of us know, is the IMF's mission chief, and she's a senior resident representative for Nigeria. And just to give a bit of her background, among other several things, she was IMF's mission chief for North Macedonia and Slovak Republic, and she led the cross-country work on Eastern Europe as a deputy head of the IMF's European Department's regional division. Jasmine has a BA in economics and government from Smith College and a PhD in economics from American University in Washington, D.C. I would now hand over to Jasmine. Jasmine, welcome, and take the baton.
Thank you, Margaret. It's very nice to be here. Good afternoon, everybody. If I can share my screen before I go to the presentation. I do not see the option anywhere. Joseph, do I have the right to share my screen?
Yes, but I'll share yours now. Share your picture.
Okay, very good. So let me get started. We are going to talk about today Nigeria's recent economic performance and outlook, risks, and priorities. Next slide, please. Yeah, that one. So Nigerian economy has had a difficult year after being hit by COVID-19 pandemic. If you recall, in the first quarter of 2020, oil prices dropped by some 80%, and stock of foreign capital holding in the country dropped by 40%. After experiencing these sort of very large shocks in the second quarter as COVID-19 cases started to rise, the government had to put in place strict lockdown measures. So the combined effect of, sharp drop in oil prices, foreign capital outflows, and the pandemic-related lockdown caused a historic fall in output in Q2, when real GDP contracted by over 6%. For the year as a whole, which is what you see in this first chart here, real GDP contracted by close to 2%. This is better than what we and most others had expected. However, when you compare with what has happened elsewhere in sub-Saharan Africa and also in low-income countries, the drop is pretty sharp and striking. And also relative to Nigeria's own past, the contraction is severe and historic. Going beyond growth, looking at the right-hand side chart, the impact has been particularly harsh for the vulnerable. Overall unemployment rate is now close to 30% and youth unemployment rate above 40%. If you take into account underemployment, the situation would be worse. And in addition, prices of necessities have gone up. The latest February data shows that food inflation is now above 20%. And with limited social assistance, surveys conducted by the National Bureau of Statistics shows that a significant share of population still facing food shortages. Next slide. So let's look at the macroeconomic situation. That has also worsened considerably in 2020. Overall fiscal deficit, which has been on the rise for quite some time, is estimated to have widened close to 6% of GDP last year. And this happened despite the removal of fuel subsidies and efforts to reprioritize spending. The current account deficit is estimated to have recorded another sizable deficit in 2020, despite large drops in imports. Public debt rose to over 34% of GDP. While this level of debt by itself is not alarming and it compares favorably to the average in other developing countries, there are sustainability risks arising from very low levels of revenues. And because of these fiscal vulnerabilities and low debt servicing capacity, you can see that Nigerian sovereign experienced downgrades by rating agencies last year. Next slide. So let's move to 2021 now. These are the IMF's growth estimates and forecasts from our January 2021 view. The red dots are estimates for 2020 and the bars are projections for 2021. We are projecting world GDP to bounce back from a severe contraction of 3.5% in 2020 to an expansion of 5.5% this year. Buoyed by news of several vaccines, we revised our forecasts for 2021, and the recovery is projected for both advanced and developing/emerging market countries. Although it will vary considerably across countries, depending on a number of factors, initial conditions, medical intervention, policy space, etc. Next slide, please. So let's move to Nigeria. Things are looking better in Nigeria as well. We are seeing a turnaround in Nigeria in the fourth quarter. GDP stopped declining. Agriculture is doing better than expected. ICT sector is doing exceptionally well. The rise in the ICT sector is a trend that has started a while back, and not just in Nigeria, we're seeing in other countries in the continent as well. The COVID-19 has definitely given this sector a boost. So high frequency indicators, you see here the PMI, that's also pointing to a move to the expansion territory for manufacturing and the whole economy. Mobility is mostly back to pre-pandemic levels. So there are several positive signs. In our recently concluded Article 4, we projected this year GDP to grow by 1.5%. This is before we had the Q4 data. So based on the more favorable Q4 data, it's likely that we will be revising up our 2021 growth forecast in the next round of projection, which will be out next month. Next slide, please. So this upward revision is also because of recovering oil prices. If you look at the composition of Nigerian GDP, oil directly contributes to about 10%. But if you take into account the indirect impact of oil, there's another 30 to 35% of the economy that are related to oil prices. And the second chart here, you can see that there is a strong quadratic relationship between what happens to oil prices and that part of the economy, which is not directly oil, agriculture, or ICT related. So for example, if oil prices are at $60 per barrel, a $5 increase would result in the non-oil, non-agricultural, non-ICT GDP growth to increase by 1%. And overall growth to go up by 0.5 percentage points, other things being equal. So rising oil prices definitely is a very positive thing for Nigeria. Next slide, please. So of course, the recovery is subject to downside risks. The most important one is the outlook for the pandemic. Nigeria is in the midst of the second wave, as many countries are. Some countries are having third wave. Daily cases were higher than the first wave. More recently, the number of daily cases has declined. The government of Nigeria has also adopted a national strategy for vaccination, vaccine rollout. The goal is to vaccinate 40% of population this year, another 30% next year to reach herd immunity. The two main platforms they're using, WHO's COVAX and African Union's COVID-19 vaccine deployment and access strategy. There are, however, several challenges. First of all, the procurement of adequate vaccination to vaccinate 70% of the people. That's a lot of vaccines to procure. So that is yet to be in place. Second, there may be also issues regarding the operational capacity and readiness of the vaccine providers to effectively execute the vaccine campaign. For example, the storage, handling, and stock management requires rigorous temperature control in the supply chain and availability of cold chain equipment, at least, more for some vaccines, less for others. So that's an issue. And third, financing itself, right? At $8 for a full dose, the cost of vaccines is significant. There are also operational costs, maintenance costs, transportation costs. So it's fair to say there is a way to go. That's next slide, please. A second risk is rising inflation, which I mentioned earlier. Inflation was on the rise even before the pandemic. The pandemic just made it worse. With the economy opening, it's hard to say whether the inflation will go down or not. When we looked at the composition, there is strong supply side impact coming from the, pandemic related shutdown, but there is also the factor of the demand side factor, right? You can see in the right-hand side chart, regional inflation and mobility. The states encountering stronger drop in mobility also saw lower inflation, highlighting the role of demand compression. So it remains to be seen what happens to inflation, and of course, higher inflation, dents into growth. Next slide, please. And the third risk is, okay, I'm told my time is up, so I'm going to go through very quickly. This one you all know, investor sentiment remains very weak. FDI inflows have been very low for quite some time, and Nigeria has been relying on short-term portfolio flows, such as, automobiles. So there is clearly a big risk coming from, what happens to this, chunk of short-term flows stock that's sitting there. There are outflow risk, and at the same time, there's very little new inflows. Next slide, please. So very quickly, what are the policy priorities? Maybe we'll get into more of these during the discussion. So I am just going to mention here that the two priorities, one is on the fiscal front. Domestic revenue mobilization is a must. Because of low revenues, there are many risks and vulnerabilities on the financing side, including reliance on central bank financing, which you see here on the right-hand side chart. Next slide. And the second priority is exchange rate reform. So these charts are all very familiar to you. I will not go into details. Just to mention that there have been some adjustment in the official exchange rate, but parallel market premiums remain persistently high, indicating FX demand supply mismatches, shortages. There's also transaction volume remains, limited in the INE window, which basically emphasizes the point that there is still a way to go before the the constraints that private sector is facing are alleviated. I'll stop here. Thank you.
Thank you very much, Jasmine, for that insightful presentation. So we'll go on to the next item on the list. So I'll be introducing our panelists. We have a very broad, wide swathe of private sector experts on the panel who will share their perspectives on growth of the Nigerian economy. First, we have Dr. Bongo Adi, who is the assistant professor at the Lagos Business School. Prior to his faculty appointment, Dr. Bongo Adi was CIPRA MTN Research Fellow at Lagos Business School, where he facilitated classes in public-private partnerships, project finance, and development. He has over 15 years experience in teaching, policy research, and consulting. He has received several international awards, including the Japan Society for the Promotion of Science Award. He is a UNU Fellow and a World Bank Scholar. And the next on our list is Majabi Ayomide, who is the chief economist for Africa at JP Morgan. He joined the firm in 2018 after covering sub-Saharan Africa markets for 5 years, particularly economics in West Africa. He has a MSc in economics from the University of Warwick in 2012 and is a top-ranked analyst according to various surveys, such as institutional investors. And the third person is Amaka Anku. She works with Eurasia Group and heads the firm's Africa practice. Amaka helps clients understand the interaction of politics, policy, and markets across sub-Saharan Africa. She holds a bachelor's degree from the Woodrow Wilson School of Public and International Affairs at Princeton University and a Doctor of Law degree from Harvard Law School. And lastly is our moderator, Dr. Nonso Obikili, an economist whose research primarily focuses on Africa, economic development, microeconomics, and political economy. Is currently Development Coordinator Officer Economist for the United Nations President Coordinator's Office in Nigeria. He was previously the Chief Economist at Business Day in Lagos and a policy associate at Economic Research Southern Africa in Cape Town, and a non-resident fellow at the Center for Global Development in Washington, D.C. So I'll be handing over to Nonso, who will be moderating the panel session. Also, Jasmine Rahman will also be part of the panel as well. Hi, Nonso.
All right, thank you, Joseph, and thank you, Jasmine, for what has been a great presentation. I guess I will start off the panel by asking a few questions to you, Jasmine, some of the panelists as well. And just to remind you, take questions from the audience. Please put them in the Q&A, and don't forget to add your name and your organization as well as part of your question. So Yasmin, I guess my first question is on the recovery. I mean, like you mentioned in your presentation, the recession was unprecedented in Nigerian history. Not as bad as everybody hoped, but it was still not very good and significantly worse than many other peer countries. And now we're recovering. But my question is, are we recovering to the conditions in 2019? I mean, in 2019, before the pandemic, we were still kind of recovering from the last recession. And there was already some signs of some vulnerabilities. Of course, in the interim, we've done some reforms, like you mentioned, exchange rate adjustments, some removals of subsidies. But are we returning to the 2019 economy, or are we recovering to something that is perhaps more optimistic?
Thank you. So indeed, I mean, although Nigerian economy went through a historic contraction in 2020, it wasn't as bad as we had expected, and the economy exited recession in Q4. In terms of sectoral performance, the two sectors that sort of pulled the economy out of recession, there was the services sector and agriculture. Both of these grew year on year, something like 3% in Q4. And collectively, they have about 40 plus, close to 30. So close to 70% of the GDP, comes from these two sectors. So this is where the sort of Q4 recovery came from. In terms of agriculture. So agriculture has been less affected by COVID-19 lockdown. So, unlike services or manufacturing, this is likely because, agriculture is mostly subsistence and relatively not that dependent on supply chain. So it was a bit insulated by the pandemic. So in 2020, while agriculture for the year as a whole grew by 2.2%, the rest of the economy contracted by 2.4%. So that's that. But if you take into account historical performance of agriculture, let's say the last 5 years or last 10 years, agriculture grew by 3.2 and 3.6% respectively. So even though agriculture did better than non-agricultural economy last year, compared to this historical performance, it didn't do that well. ICT sector I mentioned in my presentation has been a growing sector for quite some time. So there is, some resilience coming from there. But broadly speaking, overall recovery, is projected to be subdued. So we are projecting medium-term growth to stay in the range of 2.5%, which is below your population growth of 2.6%. And that's roughly because, big picture and policy constellation sort of remain the same as we had, before COVID-19. So you still have the trade restrictions, a highly managed FX allocation system with multiple exchange rates, limited revenue sources, and a kind of, if you like, encumbered monetary policy regime. So without fundamental changes in all of that, we will see recovery and we will see, real output sort of going back to the pre-pandemic level, the real GDP, end of 2022, sometime next year. But it's not going to be the robust growth that's strong enough, to create adequate jobs and increase the living standards. Thank you.
Thank you. Let me bring in Ayomide. So you do a lot with investors, right? And so what do you think about this? What do you think about the Nigerian economy in terms of our recovery? Are we recovering to some of the conditions in 2019? Or do you have an opinion that's different from what Yasmin has just mentioned?
Yeah, thanks a lot, Moson. Thanks for having me. I think, I agree broadly with Yasmin's assessment. I would say maybe we were less pessimistic on the growth outcome for last year. So I think at the start of the pandemic, probably had 2.3% contraction, but no one knew where the economy would be. And the reason for such a mild recession expectation at the time was just realization that the political economy couldn't deal with an economy fully in lockdown, right? So that was the main driver for some optimism. Like Jasmine mentioned, the main drivers for growth last year, especially in the fourth quarter, was agriculture and services. And to be fair, that's the factor behind that is the informal type of economic structure that the country has. We've done a bit of work on trying to figure out what are the long-term scarring effects of the pandemic. Elsewhere, sort of in EM, we know that women are a very productive sector of the labor force, right? So there's a concern that women have taken a larger share of the brunt in terms of being away from work and doing more housework. To the extent that is replicated in countries like Nigeria are not yet known, but that's certainly a concern that when we come out of this pandemic-induced recession, we may not go back quickly to potential growth, simply because a significant part of the labor force, hasn't been able to recover as much. So that's one concern we have, and just for the record, we have growth around 2% for this year, which is still quite low. Second will be, and I'm sure we'll talk about this later in the panel. I saw it on Jasmine slides as well, is reform agenda, right? So we talk about FX reform a lot. The government authorities have made movements on FX, but it's still not enough. And from an investor perspective, the expectation isn't that Nigeria should go to a fully floated exchange rate, right? So it's the expectation or the ask is that Nigeria should go to an exchange rate where it's clear that demand drive and supply drive prices to an extent, and would argue that the current environment, at least up to the last, a week or two ago, was quite supportive for Nigeria. Oil prices were high, in the 70s. It was an opportunity to make adjustments and try to normalize. So that we think will remain a drag on the economy. And then finally, on the big picture points is structural reform. Revenues will be the first part of that. Again, I saw that on Jasmine's slide. Our feeling is that the numbers look bad because revenues are taken informally. So we think that there's very limited scope to actually push the revenue mobilization higher via the standard ways in which countries do it. I think that's this government, to be fair, has tried over the last six years, hasn't worked. So they either have to raise taxes or raise taxes in a way where the higher earners, progressive taxes, or they look inward and realize that across the value chain, people pay taxes in Nigeria, either to formal tax collector or informal tax collector. So the government needs to come up with a way to formalize tax taking and take it into the government coffers. And that's, I think, something that is doable, obviously within the constraints of the different cycles of politics, but something that's doable. And then finally, on the structural side will be ease of doing business. And the biggest point there will be electricity. We know we don't have World Bank here, but we know that the government has been talking to different multilateral agencies, World Bank included, on how to streamline and make the electricity distribution and generation a bit more effective in Nigeria. We think that is going to be something that should impact and has the potential of raising potential growth substantially over the next 3 to 4 years. Now, do I have huge confidence that either one or two or three of those structural reforms will be implemented? I would admit no. I think, and that's reflected in our growth forecast, right? So we do have growth 2% this year, goes up to about 2.5% next year, and we are effectively stuck there. So we think that the easiest to do will be FX reform, but we don't see that would materialize anytime soon.
Okay, thank you. I want to bring some points from that back to Jasmine, since you're the presenter. Now, this is me speaking as a Nigerian. Anytime you hear the IMF in Nigeria, you hear exchange rate reforms. That seems to be the only thing that the IMF talks about in Nigeria. And look, I'm an economist also, so I get that macroeconomic policy is fundamental to any kind of economic growth. But in the last year, you've seen countries all around the world try to experiment with all sorts of things, from MMT, as they say, it's unconventional policy here, negative rates there. So I mean, can you explain to our audience how fundamental is exchange rate policy to the Nigerian economy? I mean, you showed a graph in your slides. When oil prices are high, some sectors of the economy that are not necessarily oil related tend to do better. But how much of that is just down to a functioning FX regime?
Is that a question for me or a question for somebody else? Okay. First of all, I should say that we do not just talk about exchange rate. We have been screaming about domestic revenue mobilization for a long time. More recently, governance is also a key factor. You're right, the old fund, very long time ago, we were always, talking about only macro, but we realized that, there are many other things which are pretty macro critical. So that's just a clarification of what you just said. Now, why is exchange rate important? I mean, can you think, how many countries can you think of that has a parallel market exchange rate? Okay. That's, and something as big as Nigeria, something as systemic as Nigeria, the largest country in the continent, which really has a huge potential shouldn't be having a parallel exchange rate market. So, that's just to say that, yes, a lot of countries are doing, a lot of unconventional things, but I think the problem here is very fundamental. How many countries have like multiple exchange rate regime? A system where, you have different exchange rate for different purposes. And you as a private sector person, a private business, you go and you ask for exchange rate. You don't know where your queue is, when you will get it, this kind of sort of, I don't know if you like lack of transparency, lack of forward, planning. I mean, all of these uncertainties for businesses, it creates problems because you want things to be as clear and as efficient as possible. You have, as a businessman, you always have a forward horizon, right? Not being able to know, will I have the exchange rate in time to buy raw materials or to repay debt or what have you, and what will be that rate, where will I get it? All of these things that affects decision making, that affects real sector, that affects investment. I mean, not for no reason you have seen FDI dwindling in Nigeria. Once upon a time, so I have a chart somewhere in my staff report, so I'm going to fish it out. Once upon a time, Nigeria used to get the largest part of FDI in Africa, sub-Saharan Africa. Let me find the chart because I think that chart is actually quite telling. So if you look at share of SSA FDI, Nigeria used to have 60% of it in 2006. And in terms of GDP, Nigeria's FDI inflows were 2% of GDP. That share has now gone to close to zero. And the share of SSA FDI has dropped from 60% to 10%. So a lot of other countries have sort of, come up, joined the rank, started to get this FDI share of the pie, So, yeah, I think it's pretty fundamental. It's pretty fundamental. It's one price in the economy. Exchange rate is a very key price in the economy, right? It signals your competitiveness. It signals your, it's important for decision making, as I was explaining. So that is why we keep coming back to that point again and again. Let me also make another point. I think the other panelist was saying is that I don't think anybody is saying, float your exchange rate, revamp everything, become a fully floating country. I don't think that's what people are saying. I think what we are recommending, and you can find much more details in our Article IV staff report, is in the very near term, there are really two priorities. One is allow for bigger adjustment in the exchange rate so that this mismatch that you have seen since, let's say, March, manifested both in the parallel market premium, manifested in the low turnover in the INE window, manifested in offshore market, etc., that goes away, right? You have to allow for the exchange rate to adjust to get rid of this FX mismatch. So it's less painful for the real economy. That's one. The second thing is unify the exchange rates. As I was saying, you have to really look hard to find other countries that have that has Nigeria's, potential dynamics and importance, that have this sort of multiple currency practice. So that's the near-term priority. In the medium term, look, should they have a floating exchange rate? Should they have a fixed exchange rate? That's Nigeria's business. That's not IMF's business. You have oil economies that have pursued both types of exchange rate policies and have succeeded. What is important is that the rest of your macroeconomic policies hang together and, consistent with whichever choice you make, and that you make it clear to the rest of the world and to the rest of your country and your, private sector decision makers that this is how exchange rate is going to be managed going forward. So I'll stop there.
Okay, thank you very much for the concise answers. I think you make some very good points. And it's good to know that the IMF is not just about the exchange rate, it's about a lot more than that. And so taking the question to Amaka, and this question, I mean, when you think about Nigeria's problems, especially on exchange rate, you think about crude oil. Crude oil is the driver of many things. And a lot of talk has gone into, managing import demand, and I don't think we want to spend much time talking about that. I want to focus today on exports. We see AFCFTA is coming up. It's going to be a real thing. Nigeria can't avoid that. So what are you seeing in terms of our export diversification agenda, what do you think that we can do or we should be doing to move the needle on that front? And this is to Amaka.
Thank you, Nonso. Thank you, Joseph and Margaret, for inviting me to be on this panel. So, I mean, great question. And I guess this is what's been missing from this conversation, right? When we say Nigeria shouldn't have a parallel exchange rate, that's true. But we do, it's important to talk about why the reality is what it is today, right? The reality is that Nigeria doesn't produce much, right? Nigeria doesn't export anything except oil, which is an international export that is denominated in dollars. So there's no demand for Naira, right? So when we talk about the exchange rate, and even like when we talk about FDI, I just want to be clear, I think we should be careful about linking those two things, the assumption that somehow the reason there's no FDI into Nigeria is because of the exchange rate, right? The reason FDI has been falling is because most FDI in Nigeria is oil, has been into Nigeria's oil sector, because that has been practically the only, there's just not that much production in Nigeria. We're not producing much except for oil, except for producing oil for crude that we export, right? And so a lot of FDI historically in Nigeria has gone towards oil investments, which is now, obviously, as everybody knows, the end of oil is near and it's dying out, and there's not a lot of investment in oil, right? So I just, to put that out there. So what do we need to do to actually diversify our exports, right? I mean, the first thing is really to stimulate local production, right? And this is where I think that, everybody talks so much about imports, right? Without talking about the reason we are importing is because we don't produce, right? And so we need to start producing without getting so bogged down in the labels of whether we're doing import substitution or not. We just need to produce stuff, whether it's produce it first, produce it for yourself, produce it to eat, produce it. That's number one, right? And I do think, yes, that we have seen there's been slightly some more seriousness. I think that when they say necessity is the mother of invention, there's a growing consensus about this, I think, across all levels of Nigerian society, that Nigeria needs to produce more, whether it's rice or, whatever, palm oil, so on and so forth. So we need to produce. And then, of course, the part that's been missing in a lot of public discussion in Nigeria is we need to produce for export. But I do think it's important not to skip the first step, because everybody tends to do that. They're just like, well, export, export, export. If you don't have anything to export, you're not going to export, right? Like, you can't just magically start exporting when you're not even producing anything and much locally. Let me not be, I'm being exaggerating. Of course, there's some production, but it's very little, right? So I do think we need to see a lot more public conversation about the outward orientation. That's what's been missing, in a lot of this discussion and a lot of our discussion about growth. What does that mean? I would say you should cut the official processes for exporting right now in Nigeria is extremely cumbersome, right? Nigeria Customs Service just put out a statement outlining the links, and I looked at number one. It was number four things. Number one was like, get licenses from like 4 different agencies, right? If you look at it, it's 12 different documents, 6 different agencies. Crazy, right? For a country like Nigeria, if we really want to be incentivizing exports, we need to cut the official steps to exporting, right? We need to cut it down to like 4 total, actual 4 steps, not, each one step is like 5, 10 different things with 10 different agencies, right? Whatever that means. So that's number one, cut your official steps. Obviously, you have to fix your ports, fix your port processes. There is some, I would say, encouraging developments on that end. The fact that there is, a plan for a rail that would go all the way from Lagos to Kano and then link to the port is a good thing, because then you can actually you can bring something from Kano or wherever, take it out, clear it in Lagos, and so on and so forth, and vice versa, right? That's very important. And then you have to actually create more incentives. I think this is talk about trade and trade liberalization. I think there is we need to remember a part of why we're where we are today is that the private sector will always be incentivized to maximize its bottom line, right? That means there's not a lot of incentives necessarily in research and development, in investing in exploring new processes, right? In taking risks. So the government needs to be creating, incentives for companies to export. That could be tax credits, that could be linking, or even and maybe even restrictions for certain companies that import but don't export, right? It could be, but it has to be clear and enforceable and linked to, say, maybe financing. If you're not linked to exports, if you're not exporting and your export revenue is not growing, then those incentives get pulled, right? There needs to be an aggressive targeting of how do we incentivize companies to actually export? So I'll stop there because I've been talking for a while and let somebody else get in.
Thank you very much, Amaka. I mean, lots of good points in your answer. Now, Dr. Bongo, I want to bring this to you. You're in Lagos, Lagos Business School. You interact a lot with big business in Lagos. What's your opinion on this? What do you think that they feel about this export Nigeria agenda, if it does exist? AFCFT is coming, and it will become difficult to hide behind some of our traditional import protection policies. But do you see a concerted effort on the part of business to try to expand, even if it's to inside Africa or to elsewhere? What are you seeing on the street?
Okay, thank you very much. Thanks to all the other panelists, to Jasmine, to Amaka, who just made some very interesting points. I would like to pick up from where she stopped, because the question you asked me is directly linked to what she already answered. A couple of days ago, I was on addressing similar question on television, Arise TV with Boston, and the question was on the Logistic Performance Index. So when you look at that index and look at Nigeria's performance, you will find out that we are actually, I think, about number 113 or so in the world out of 160 countries. We perform worse than countries like Mali, Burkina Faso, Benin, our neighboring country here. And then the Logistic Performance Index is across this, I think, sub-indices, indicators. You have customs, which Amaka spoke about. You have infrastructure. You have international shipments, and then you have logistic quality and competence. You have tracking and tracing, and as well as timeliness. Those are the six sub-indicators that make up the composite index of Logistic Performance Index. So when you pick out each of them, you see that Nigeria performs worse than other African countries. So when you talk about industries, leveraging this AFCTA initiative and all of that to expand to other African markets, we have to look at first our internal market dynamics. Okay, and that takes me back, because a little bit of history may help us here, because this is sort of reminiscent of in the 80s, during the age of SAP, Structural Adjustment Program. So it seems that Nigeria, unfortunately, seems to have found itself, at the same point we were in the 80s, say 1984, the time when the current president was also the military head of state. Okay, where we started to experiment with the structural adjustment program. We had the twin deficit of the current account deficit. We have fiscal deficit as well. So we have budgetary deficit, we have current account deficit, we have worsening exchange rate situation, we have rampaging inflation, we have very high unemployment levels, and of course increasing levels of poverty and immiseration of people. So on all of that, so the World Bank, IMF came up with those conditionalities, what the government was supposed to do, in order to open up the space for diversification. Part of that was to correct the internal market imbalances that we had, the exchange rate, the price controls, stop controlling the interest rates, eliminate commodity boards, overhaul the administrative structure of the public sector. We had update and strengthen the demand management policies, adopt policies that will expand economic supply base and production and all of that. So if you look at that, it seems that Nigeria is almost 34 years down the line. We are back to those conditions, those events that brought about the intervention of structural adjustment program. So unfortunately, we don't seem to learn from history. So, and I don't think there is much that industries or companies, firms can do at this point in time, because every effort that they make seems to be somehow undermined by government policies that at best been very inconsistent. And then we have so many, disincentives, for public, private sector investment and action in the economy, because we see that there is this ambivalence at each point in time where government seems to be, chasing two different things. On one hand, they behave as if they are interested in a private sector-driven economy. On the other hand, you have this socialist or populist sort of orientation that the government seems to pursue. So these are things that you cannot kind of marry together. Difficult to bring this together. And I don't think that is creating the right incentive for businesses to continue to expand. Up until 2015, actually, I think so many, especially in the banking financial sector, they were making forays into other African countries. But I don't think that in a country at our own stage, at our stage of development, should actually bank on the banking sector or the financial services sector to drive growth. We should be looking at manufacturing. But unfortunately, the conditions that have, that been created by the various administrations from the time of SAP, because it seems that government expected just a plug and play implementation of the IMF recommendations, but that didn't happen. So what happened? What did really happen over the years is the complete decimation of our manufacturing base. So when we talk about the real economy, it is not really performing. Manufacturing has actually not recovered from the recession of 2016 up until now, with interest rates and the foreign exchange, as we have been talking about. So it's not helping them. So except to begin to grow the manufacturing base, that is when we can talk about, when we can hope to begin to benefit from the AFCTA. And then for the industries in Nigeria, the conditions are not just optimal for them to leverage all those opportunities. I think that is the impression that we seem to have. A lot of companies have actually folded over the period, again, because of inconsistent government policies.
Okay, thank you, Dr. Bongo.
Can
I'm
I
going
just
to confess,
okay.
you don't seem very optimistic that there is a road. But just to remind the audience, send in your questions by Q&A, and make sure you add your name and your organization. So just to move on to what we think about crude oil in Nigeria. I mean, yes, exports, FX inflows are one part of the story. The second part is government revenue. It's a popular phenomenon. Once crude oil prices crash, government starts running around helter-skelter looking for money. We're going to see news about the FAAC fighting over how much to share and how much is shared. And we know fundamentally the tax structure of Nigeria needs to change, I think. We've seen some changes. We've seen the finance bill try to implement some marginal changes. We've seen some recognition from the IMF about increasing VAT, and that has made some impact. My question is, I should start with you, Ayobide. Do we need to think about more fundamental tax reform? Or is there a path with the current structure that will allow us to start to close this crude oil-driven government revenue problem?
No, so sorry to interrupt. Do you mind if I just close the loop on this export question before we move on, because it's very important? On my last, can I just make one more point?
I'll give you 30 seconds. 30 seconds.
Okay. So because when we talk about the exchange rate and like whether it should be a unified exchange rate, I think that in an ideal world, obviously we want a unified exchange rate. But the part of the point I was making, but I didn't fully land up in my last comments, was until we actually have more exports, right? I actually think we need to be subsidizing production, because that's the only way, you know, you need to, it's fine, you should, you know, if I were the CBN, I would actually allow the any window to go, just let it go. You don't intervene in it, just let it go to whatever it'll go to, and have one CBN window for manufacturers. Because the point is that in an ideal world, yes, we should have a unified exchange rate, but we don't have enough dollars because the only one source of dollars is dwindling. So you need to actually have a strategic focus on encouraging and subsidizing actual production and nothing else. Anyway, so yeah, that's, I'll stop.
Yeah,
we can...
yeah, sure.
Okay, thank you. I mean, I think it's a chicken and egg situation, right? What do you do first? But I mean,
yeah.
Let's try to move on to, we have just about 35 minutes left. Yeah, so taxes is the other hand, the other arm when it comes to crude oil dependence. What can we do? Are we doing enough?
Yeah, and I don't think there are, you know, there are different, you know, events that are not interlinked. So, you know, Amaka makes a great point around, you know, different exchange rates. But you think about a small exporter who doesn't have access to FX, so this priority manufacturing window, and has to go to the parallel market to buy FX because some of the costs for exporting are in foreign currency, but then isn't allowed to do whatever they want with the FX proceeds and is forced to sell, you know, FX at the interbank rate. So what does that manufacturer do? They don't know, that they stay away from the official market. So I think it's all linked. And on revenue, my view is the saving grace for Nigeria is that most of the debt is in local currency. So the central bank can use moral suasion to, you know, roll over debt when it matures. It can print money when it has to, and there's not a huge dependence. It's growing over the last 3-4 years, but there's not a huge dependence on externally financed debt. I do think, though, that many of the reforms that have been made on revenues barely scratch the surface. I fundamentally think that you can make very limited ground on the positive side by, you know, the standard revenue mobilization measures, because the fact is Nigerians pay indirect and direct taxes, and until the government is able to identify, it's a big task, but identify and then properly account for and take those taxes, nothing will change. Maybe, you know, Amaka's suggestion of if you stop focusing on only import substitution and go towards export-led policies, that also is a way to take more taxes, maybe, so you grow the whole economy. But I think I'm just less optimistic that, you know, we are moving fast enough in that direction. So the end goal here is, you know, debt to GDP is still relatively, you know, benign, lower than 40%, but it's rising, and that's the challenge. Debt service to revenue. You know, the government says it's a revenue problem, yes, but it's been a revenue problem for a long time. And, you know, what you need for that to, you know, become a risk event is some form of banking sector crisis, such that deposit growth, you know, is less than the refinancing needed on the government side, and as a result, government starts to struggle in refinancing its local currency, not just talking about external funds. So, you know, my concern is that Nigeria hasn't utilized the time that it had over the last 4 or 5 years. First opportunity was oil prices in 2015. We've had oil prices again decline over the last 2 years. That wasn't used as an opportunity to reform. And then now, you know, we've not used the opportunity to raise revenues as well. And my concern is that, you know, debt continues to pile up and we go into the 50s and 60s in a few more years, and access to finance, you know, goes up, becomes tougher to get for Nigeria.
Okay, let me loop Yasmin into this. I know the IMF typically does not deal in political issues, so let's stick to the technical side of tax reform for you. We've increased VAT from 5% to 7.5% in the last 2 years or so. That has had some marginal impacts. But what are the options? What is the real potential for technical reform in terms of collecting taxes? We are lucky that we have a lot of new kind of innovations coming up. We've seen the NIN, which is one. There's a lot of digitization in the process as well. So what do you think the key potential for technical tax reform is? And this is for you, Yasmin.
Thank you. Maybe before I go there, I want to dispel one myth. I think somehow Amako thought that we were saying that fixing exchange rate will promote, will just by itself promote diversification. Of course not. Exchange rate is just one part of the puzzle. In order to fix the big problem, promote diversification, you need to fix the trade enabling environment, which you discussed, at length, and all very good points and valid points. Is how cumbersome the trade itself is to import things. All of these restrictions, that hampers the private sector very much. There's also the governance issues. There's also the business regulations, regulatory environment. There is also the issue of access to finance. So all of these things will play a role in terms of diversification. Exchange rate is by no means the only solution, but it is an important point in the puzzle. On the question of tax revenues, so how do we raise revenues? With the economy now barely out of recession, this is not the time to raise taxes, right? Raise tax rates. The immediate focus should be on strengthening tax administration and collection efficiency, where there are significant gains to be made in Nigeria. So we did some analysis in terms of comparing Nigeria's tax collection efficiencies, with other countries. And what we saw is that across all tax categories, collection efficiency is very low. So for example, take, PIT, personal income tax. The base is extremely narrow when compared to the large labor force that you have in Nigeria. Only 13% of personal income taxpayers are registered, and only 2% of them are active payers. Take value-added tax, the other, big source of taxation in most countries. It is estimated that the compliance rate is between 15 to 40%. So there is significant room for revenue increases from administration improvement, increasing compliance rate, segmentation of, taxpayers, large, medium, small, and you have to have a special, different strategies for going after compliance in these big categories. We are very much involved on this. We have been for quite some time. IMF gives Nigeria a lot of technical assistance. And as you saw in the finance bill, there is a lot of let's say willingness and recognition of the revenue problem, but it's not something that can be done in one day. Revenue administration takes multiple steps, and more importantly, you have to stay at it, right? And you have to build on small improvements. So that's sort of, let's say, priority number one. But will that be enough to raise Nigeria's revenue levels, enough to meet all the needs, right? It's a revenue level at 8% of GDP is very low. It's one of the lowest in the world. Whether you compare it to oil countries, non-oil countries, sub-Saharan Africa, low-income countries. So to go from 8% to a level which is sort of roughly, a threshold where government is deemed to be effective, just doing administration will not be enough. Something will need to be done on the tax rate side too. Once the economy is, when the recovery is, in full swing. So what do I mean by that? You mentioned that the VAT rate was increased to 7.5%. But when you compare that to ECOWAS countries, which are Nigeria's neighbors, the tax rate is still half of the ECOWAS average, right? Excise taxes, which are important source of revenue in many developing countries, yield practically nothing in Nigeria. So, first order of priority, we need to collect what we can collect with the current tax rates, i.e. improving administration, compliance, etc. But once that's done, at some point, Nigeria will also have to increase the tax rate, simply because the rates are relatively low compared to peer countries, and the need for revenue generation is that much larger. Thank you.
Thank you. And just a final question from me before we move to the Q&A. And this, I guess, I can take the same task question to Amaka, but from the political side of things, right? Tax administration is all good. It's fine. There's technical issue that needs to be resolved, needs to improve administration. But there's also the political side of tax reform, right? Tax reform is one part technical, another part political. People pay taxes not because they want to, but because you force them to, and you penalize them if they don't. As Yasmin mentioned, we have very low personal income tax rates. And yes, you can see Nigeria has about 60% poverty or 40% poverty rates, but that means 60% is not poor. And many of these 200 million people aren't paying taxes. So first, but do you see a path out of this tax revenue problem without serious political reform? And if you don't, what kind of political reform would we need to see in the next maybe 3-4 years to really show that we're moving in the right direction with respect to solving this revenue challenge? Loaded question, I know, but
loaded question. I'm like, where do I start? No, but I think, I mean, you hit the nail on the target. You can't have, or you ultimately can't have substantial tax reform without also the political will and political reform, right? So I mean, what I would say is that one of the most underestimated pieces of government action and of governance here, especially for Nigeria, and this is not limited to this administration, it's every single Nigerian administration, in part because of the military years, is that they are terrible communicators, right? They're terrible. There's no communication, there's no framing, there's no ownership of the narrative. The government is always defensive. It's always somebody else frames the issues and they respond to it, right? And to me, I would say this is like, it's one of the biggest issues. In order for Nigeria to actually get to the point where it's collecting 15, 20, 30% of its GDP, its economic activity in taxes, it needs to be able to actually frame, like have a clear narrative about exactly what it is it wants to do, how it's going to get there, what levers it's using, right? And then of course you need to fix justice. You need to show nothing is going to be fixed overnight, but you need to show a clear, sustained, I would say, concern and focus on fixing our justice issue, right? When I say justice in Nigeria, I mean basic things, right? Like people shouldn't be getting shot by police officers and there's no prosecution. There's nobody goes and prosecutes them, nobody arrests them. I mean, you can't have a country in which, right, like you expect people to pay their taxes and you don't prosecute the people who are killing the people, right? This is one of the things that I always say, if you have a political party in Nigeria that really, takes into account the issues of justice in a holistic manner, they could win a landslide in Nigeria. So I would say, look, you have to be better communicators and you have to at least show a clear and consistent effort towards issues of justice, right? Accountability. And then of course there's the political will, and you have to start somewhere. Where, in my view, where you start is from the people at the top, the politicians, right? Former presidential candidates should not be paying $5,000 a year in taxes, which is what certain presidential candidates reported that they paid in 2019. That's crazy. $5,000, that's it for your whole year? Crazy. You shouldn't even be able to say that publicly, right? So that's where I would start. Start with the politicians, start with the high net worth individuals, actually, prosecute them for tax evasion, do something, show that, look, there's accountability here, and then you can use that money to, invest in public services, and then you can start going down the line and getting ordinary Nigerians to pay. And it has to be coupled with transparency, with the ability for people to actually see where their money is going, and so on and so forth. So I'll stop there.
Okay, thank you very much, Amaka. I think, we tend to think of some of the challenges as isolated, but they're really full of society challenges encompassing many different issues. So I'll take questions from the audience, and I'm going to start with two questions that are kind of similar from Oludole Folarin of University of Ibadan and Yemi Udoye from Ovote. And I'm going to target this to Dr. Bongo, since you're in Lagos. We know the Nigerian environment is tough. We know we have infrastructure challenges. We know there are problems. But if you are a manufacturer in Lagos or in Nigeria trying to export to the world, what should you be doing? How should you try to navigate some of these challenges and the concerns that we have? What would be your suggestions. This is for Dr. Bongo.
Yeah, just as I pointed out when I did my lend my voice to the discussion, this is actually a very difficult time for any manufacturer or any international business person, whether in Nigeria. Why? Because of the difficult terrain. Okay. First, we have to look at logistics, infrastructure-wise. So, how do we access, the ports in Nigeria today? So we have a problem with the roads, which the government is still struggling to resolve. Okay. So until we have the enabling infrastructure in place, it's going to be very difficult for manufacturers or industries in Nigeria to even access African markets, even the West African markets that are within our reach. I think the necessary thing that we need to do, like when I was talking about sequencing, is that the infrastructure has to be in place. It is good. I think it's nice that right now investments are ongoing in rail as well as expanding the road network. So that is necessary in order to open up, the logistics for accessing not just our ports but other West African markets. But in addition to that, we have to also begin to reform our port processes, just as Amaka mentioned. So our customs processes are very cumbersome, and then manufacturers always complain, exporters complain about that. So these are the reforms that government needs to address first and primarily before we can begin to leverage those opportunities. I think that is what a manufacturer or any producer in Nigeria who wishes to access other markets will face in current day.
Okay, thank you, Dr. Bongo. So I have two questions. Well, a question from two people, similar questions. First from Subs in area, Schlumberger. And
It appears Nonsel has a network connection issue.
Yes, it looks like it. Joseph, can we while we're waiting for Nonsel, is it possible to get the chat details?
Okay.
Yeah, while we're getting him.
apologies, I think I had network connection issues. Am I back online now?
Welcome back.
You are. Thank you.
Thank you. Yeah, I mean, just to say that these challenges are not uniquely Nigerian, they are everywhere. So this is not a Nigerian issue. But lots of questions about the exchange rate. This is for Yasmin. Can we maintain the current status quo, at least for the rest of the year? And if we wanted to move to a more kind of sustainable regime of a unified exchange rate, what would you say are the concrete steps that we should take to get there?
Thank you. So the current arrangement that we have in place in Nigeria in terms of foreign exchange and exchange rate system, it predates the pandemic. So since the system has been in place for a long time, with the oil prices rising, which basically means higher inflow of FX, it is manageable. I think that is not the issue. We discussed earlier in terms of why a reform is needed, but if your question is strictly if Nigeria can navigate the current balance of payment pressure or with this current system, yes, it has lived with this system for a long time. Nobody should doubt that it cannot. What are the priorities? As I was mentioning, the immediate priority would be really to make sure that the mismatch between FX demand and FX supply is to some degree alleviated, not just which is to a large degree right now being managed through administrative measures, there should be scope for further price adjustment. So that's one thing. In terms of unification of exchange rate, you know, in our Article 4 staff report, which is published, you can see, we basically encourage the authorities to adopt a gradual approach to full unification. So right now, you know, I mean, you know, there is no recipe for this. You have 5 or 6 exchange rates. They're not too far away from each other. So the idea would be, you know, to move most of the transaction in one market. So INE, you have a market window there. And as more and more transaction goes into one market, you know, and the rates are close enough, dismantling them into one rate is a more or less a technical issue, right? But of course, you would need forward planning in terms of one would need to know, you know, because a lot of the FX inflows that come into Nigeria are intermediated through the central bank. Hence, a lot of the, you know, FX that's applied to the market is also by nature through the central bank. So that inflow, outflow need to be coordinated. But in terms of, you know, in terms of time horizon, you know, we basically encourage the authorities to do this unification in a gradual state. So I don't know if that answers your question.
Yes, I think it does. Okay.
There was a question in the chat for me in terms of the informal sector. Can I just take that one as well? So,
okay, yes, please.
Funmi, you wanted to know to what extent informal sector is a potential buffer against recessionary drivers. I would say it goes both ways. To some degree, you know, what we have seen in agriculture holding up, to the extent that, you know, production is informal or less supply chain driven, which is what you see in, you know, more formal sectors, it is insulated from the, you know, COVID related disruption, etc. So it has worked as a buffer. But by the same token, because a large part of the economy is informal, the reported statistics that you see is not capturing what is actually happening in informal sector. So in the surveys conducted by, you know, National Bureau of Statistics, you can see that, you know, for example, you know, a lot of people have reduced food consumption. A lot of people are still having, you know, are depleting their savings, are borrowing money from their friends and family. So how the informal sector is sort of navigating this crisis, we don't know the full extent of it. And because the statistics are not, you know, let's say if the Nigerian GDP were to actually include this informal sector, perhaps you would have seen, you know, we don't know if we would have seen a contraction of, you know, 1.8%, maybe the contraction would have been higher. So I think it's hard to be definitive in terms of whether informality has been, you know, net positive or not. But we have seen, you know, when you compare the contraction, economic contraction or economic income in impact in sub-Saharan Africa versus larger countries like, I don't know, India, Brazil, etc., where informality may not be that high, you do see a lower impact. That could just be that part of the economy or a significant part of the economy is not part of your statistics, or it could be that informal arrangements are navigating the pandemic better. Thank you.
Thank you. I have a question from Abby from Oracle. And I'm going to target this to Ayomide, since there's a political context there. I mean, in the last week or month, we've seen lots of statements from the central bank, Ministry of Finance, around this exchange rate issue. So obviously, it's the issue that they're thinking about. But why do you think there is no political will for this convergence unification? I mean, from the government's perspective, a weaker exchange rate helps them solve their deficit problems because it means that all revenue can go further. From the manufacturing perspective, it's all about access. So what is it that is the underlying logic behind this insistence on sticking to the current exchange rate regime? And this is for Ayomide.
Yeah, thanks. I think that I can categorize them into two broad reasons. First is, simply put, inflationary concerns. Now, you can say, either official inflation numbers or the fact that whenever the exchange rate moves, it's headline news. Right? It's not, and this is not only in Nigeria. This is across the world, including in other EM countries. So, you in some sense, you can understand that headline inflation is 17% is going on 18. Maybe people who actually who live in Nigeria, you say in Lagos, I expect experiencing even higher changes in consumer prices. That would be the first reason, and this is not only as it relates to FX. This is seen in subsidies. Governments tend to keep subsidies, which are most of the time ineffective, and it's clear that some other targeted form of subsidies could work, but they tend to keep it for long periods of time because the population has had it for that long, and it's difficult within the political framework to put that to the voting population. So that's the first reason. But the counter I always have to that is, eventually you make the change. Rather than wait for 3 years and have growth take a hit for half of that time. Be proactive, and it's not liked that exchange rates move. The economy has a current account deficit, so the currency would more likely be under depreciation pressure rather than appreciation. But that's a fact, and the government, it's hard to take tough decisions, but that's the first reason. And then second is I actually think is more troubling, which is there's a perception that Nigeria is different from every other country that exists in the world, because it's a big country in Africa, it's a frontier economy, so maybe the more standard monetary policy doesn't work for the country. At least that's the sense I get from policy making, which isn't true. You can hear Jasmine and the IMF saying no one is asking Nigeria to implement a float. No one is saying you should go to the extreme of becoming a market access big emerging market, but some predictability helps. Defining the different roles for different arms of government. Central bank should focus on a couple of objectives rather than all objectives. Fiscal authorities should do the same. Industrial policy should be the same. So that's my sense, that one of them is a tough decision to make in terms of politically weaker currency results in inflation. But the other one I think is more concerning, which is just having ad hoc policies because there is a belief that the country is different from any other country that exists.
Can I just come in? I would add a third reason to what you just said. I think in Nigeria you do not have a large enough, non-oil exporting, clout, if you like, constituency. If you look at Asia, and all the other countries that have done exchange rate reform, there was always a big export constituency. For them, it is important to have a competitive exchange rate. In Nigeria, you don't have that, and that missing voice also doesn't force, policymakers to look at it more strongly. Thank you.
Okay, thank you very much. Yeah, I think I'm a big supporter of the idea that Nigeria is actually a very normal economy. We just believe that we are special in some way, or different in some way rather. But for most things, we're actually pretty normal. Economics works here just like it works almost everywhere else. I have a question for Amaka. The person didn't put their name, but I think it's kind of important as well. When you were talking about FDI, you mentioned that we need to kind of promote local industry first before exporting. But this question tries to bring in competitiveness in that context. And I mean, I'm going to streamline this in terms of prices. And on the one hand, yes, we want to support local manufacturing. But on the other hand, we need to think about prices, right? We have food inflation that's very high. There's some stories that show that food prices in Nigeria are relatively larger than in the rest of West Africa. We know for some manufactured products, prices are extraordinarily high relative to other countries. So how do you square that circle? How do you balance the need to kind of promote and boost local manufacturing with the reality that people need access to cheaper, more competitive goods?
Yes, very good question. So, I mean, I saw a few questions that get to this point, and there are two aspects to this question, right? One is this idea that, which is true, that local production is expensive, right? And so how do you, it's not competitive, it's cheaper to just import. Okay. So, the first answer to this, which goes to the conversation we were having in the beginning, is that this is why you do need some level of industry protection. You do need high tariffs to stimulate production. You do need to, this is why, again, I say, if you have a shortage of FX, and the reality is that Nigeria has a shortage of FX because there's no demand for its currency, right? And so you do need to be strategic about how you use the FX that you have. And so I do think that there is a valid argument to be made for restrictions and access to FX to prioritize developmental needs. Okay, so the problem here, and this is why I don't like the term import substitution, because it's a politicized term. The reality is that we don't produce. And so because we don't produce, we import to what we need, right? So if I say, well, I want to produce, one of the ways, of course, the hard ways to do that is that you have to tackle infrastructure, you have to tackle power. That's going to take 10 years. Now, you're not going to sit around for 10 years and do nothing and wait until you've sorted out infrastructure and power, because you will never sort out infrastructure and power without production and the revenue you get from that increased economic activity and the wages. So you have to do something, right? And so one of the ways that countries all over the world have done it is by using tariffs, using things that incentivize people to produce locally. Okay, and that's why this is a very important point, because yes, you do need some of those restrictions. Call it import substitution if you like. It's a very politicized term. The reality is that you do have to figure out a way to incentivize local production, which is more expensive. So you have to protect that production against, things that might be cheaper because it's, more efficiently produced abroad, right? You do need that. What has been missing, like we've talked about, obviously, is then you also have to pair it with outward orientation in a more systematic way. So the other part of that question that you mentioned, which is, how about the, poverty? Poor people need cheap things. Okay, that is fair, right? But what I like to think of it this way: do we want to, if we want to, we want to get people to make more money to afford higher prices, instead of keeping them in poverty so that they can afford cheap things, which is what you will do if you just focus on importing forever, which is what Nigeria will do if it doesn't actually, solve its production problem, right? And so the way I like to think about it is that, in a way, high prices domestically should encourage and incentivize local production, which creates higher wages so that people can afford those higher prices. Of course, it doesn't happen overnight, but that's a better way to think about it than to just think, well, people are poor, and so we just need to give them cheap stuff. But you can't, your development strategy can't be to rely on importing cheap food, because you will need to earn the foreign exchange to import that cheap food. So you have to balance those two, strategic goals.
Okay, thank you. And I mean, I want to, move this question on to Dr. Bongo. I think the key issue there, as Amaka kind of mentioned, is productivity. On the one hand, you need to improve productivity of businesses of firms so that they can both create more and have lower prices. And I want to move to you in this particular context. We've seen a lot of incentives go to Nigerian manufacturing class, mostly to support production. But at least from the data, we haven't seen much improvement in productivity of this. The question is, to what extent do these incentives just incentivize firms to focus on their captured markets and just keep on minting the profits at this? I mean, I know there's an alternative argument that you need these big firms to be able to break into international markets. It's more easier for international markets than it is for smaller firms. But what is your opinion on this with regards to what you're seeing? So especially are firms just capturing markets and ignoring productivity, or are they actually trying to use some of these excess profits, as they say, to try to expand and improve productivity and move into or productive sectors?
Okay, thank you very much. I think I would also like to chip in on what Amaka said, because she was pointing in the direction of what is called in development infant industry protection. Okay, I think that's a strategy that most countries, especially the East Asian, the so-called Asian tigers, did apply during the time they were actually growing and developing. So, and we've seen some African countries, try to do that. But in Nigeria, each attempt that we make at, implementing such policies end up becoming highly politicized. And that brings me to the question that you've addressed to me, which is about the incentives that have been given to manufacturers and industrialists over the years that, do not seem to be yielding the expected result. And of course, we have a problem of poor resource allocation. Will I say lack of efficiency in allocative efficiency when it comes to resources in Nigeria. We have issues with the recipients of those incentives from the government. Are they the target? Are they the people who should really get them? So the problem of targeting is there. So, we have that issues, and then it's created moral hazard and adverse selection in so many instances. So I think that's the real challenge, because we've also not done a rigorous evaluation of the impact of some of these incentives over the years. I mean, even if you look at what the CBN has been doing over the years, this is not the first time. We know there was a time when the CBN advanced some credit facilities under the power and the infrastructure funds or something to, airlines and power. I think Power and Airline Intervention Fund, PIFE, some years ago. So that was supposed to be a 15 to 25 year, funding cycle. Most of the airlines that received those funds are no longer in operation today. Some of the power projects that were, that should have received those funds also no longer in operation. And that speaks to so many of the incentives, so many of the schemes that the CBN and the government has actually invested over the years. So the issue here is that of targeting. And again, we have to look at, because it's not just, a unilateral thing. So we have to look at the other complementary policies, the operating environment, whether they are supportive or enabling for all, for the recipients of all these incentives to really break into manufacturing or enhance productivity. So because we just have, we keep talking about sequencing, right? You have just one policy, but the complementary, the other necessary policies that would have enabled this particular one to bear fruit are not there. So eventually, it's, the opportunity is squandered, and at the end of the day, you don't get the expected result. And I think that is what we have seen repeating, in different sectors, over time. And it has not stopped. We are seeing it with Anchor Brewers program. So you are giving farmers money, you are giving, agriculturists, you're giving them money to produce. But again, the complementary infrastructure are not there. So at the end of the day, that is actually money that's just wasted. And then at the end, you don't get the expected outcome. I think that is what I can say to that. Thank you.
Okay, thank you very much, Dr. Bongo. And thank you to all the panelists. Unfortunately, we've run out of time. I think you'd agree with me that we could go on for another 3 hours and we will still have to talk about because there are just so many issues. But the plus side is that this means that there are many solutions as well. There are many things that can be done to change the way the economy works and to move the economy in the right direction. So I want to thank all the panelists for their very insightful contributions. And I'd like to hand over to Margaret now for the closing remarks. Thank you.
Lord, so we have Ni Yusuf. I believe he's still here. Yeah. So Ni is the senior partner at Iraqi, and he's also a key member of the board of the American Business Council. So over to you, Ni.
All right. Thanks, Margaret. And let me thank everyone for what has been very interesting, stimulating conversations. And I certainly have enjoyed every bit of the last 90 minutes. I think for me, it's clear the key messages, which is we need to solve the revenue problem. We need to make sure there is better investor sentiment towards Nigeria. And of course, exchange rate reforms, not necessarily in terms of floating, but predictability, stability, and transparency of the exchange rate reform. And underpinning all of this will be diversification of exports to ensure we do have more exports beyond crude oil and gas. And I think, of course, Nigeria is not unique and is not alone in the world. And so we should not be looking for, we should not pretend that we're unique and our solutions will so therefore be different from the rest of the world. I think the world is a global village. And so I would like to thank all the participants at today's session, and also thank all those who attended. And of course, thank Margaret and her team for putting this together. And we look forward to the next session. Thank you, everyone.
Thank you.
Thank you. Bye-bye.
Bye, everyone. Thanks. Thanks, Margaret.
Thank you. Bye, everyone.